Assalamualaikum warahmatullahi everyone. Welcome to the Islamic Financial Product and Services series. This series will be helping out our consumers to understand further the nature of the Islamic financial product offered by the Islamic financial service providers, and this will help them understand in greater detail what are they getting from the banks or from the financial service provider: home financing, personal financing, trade financing, deposits, investment account, and that. So this program will try to assist the consumers as well as the stakeholders to understand in a much more responsible manner what is Islamic banking and finance, and to what extent it will be able to benefit the society as well as the individuals who are in need of financial services to expedite their respective economic transaction. So we will begin with the fact that when Islam or when the Quran has prescribed Albay over Riba, Allah says, وَآهَلَ اللَّهُ الْبَيْءَ وَحَرَّمَ الرِّبَى. So we will say that the foundation of Islamic banking is based on the system of Albay that was elucidated or condoned by the Quran. The Quran says Allah has permitted Albay but prohibits riba. So that is the foundation of Islamic banking and finance. So we must be responsible enough to understand in greater detail what is Albay and what is riba, and how will Albay be made applicable in the financial firms and companies, and how can Albay be used without any form of the riba system, affecting it. So we can see that that whenever we look at Albay, we will look at the literal translation, which is sale. So because literally Albay implies sale, but we will see that the literature of fiqh mu'amalat have already categorized Albay beyond the literal meaning of sale or buy and sell, where Albay has been categorized into at least three groups, which is sale base, which is murabaha, salam, istisna, tawarruq, bay al-ina, and that has been, the financial product made available by the banking system. And at the same time, we can see that so when people are looking for financial services to purchase a house or to obtain a to obtain liquidity, then we can look at the sale-based contract being used by the financial service provider, and these are, as I say, the murabaha, the tawarruq, the salam, istisna, and when we look at another services like leasing that is prevalent in the vehicle sector. So vehicle financing or equipment financing usually uses a lease-based product under ijara, in Malaysia under the Hire Purchase Act of 1967. So the bank, will provide this financial leasing contract to the respective customer who would like to use ijara, leasing, instead of buying. Then we have also the equity-based contract under the concept of mudarabah and musyarakah. So we can see visit Bank Negara website, we can see the extensive guideline on this product under the Sharia parameters, and Bank Negara has been doing a very good job in putting down this contract in detail for the industry to apply. And so it is not a complex science or a complex issue, because regulation will provide the facilities for us to obtain or to secure credible information and knowledge about this contract, and that is available in the Islamic Bank Negara Sharia parameters. Then the other side would be, we want to see, for example, there are 4 other dimensions of Albay that we need to take into account. And this would be, number 1, what is Albay? Albay is sale, and Albay is trading and commercial transaction involving the taking of profit with possible loss. So I have explained this earlier, that when we do Albay, it means that we do buy and sell, at least if we follow the sale-based category, that the merchant will buy at cost price and sell at retail price, and if he's able to sell at the targeted price, then he make a profit, but sometimes he will not be able to sell at the targeted price, or lower than targeted price, he may make less profit, but there is also a possibility where the bank or the trading party could not sell at a profit, but at a loss, right? So when he sells below cost price, then he will make a loss. So that is what trading is. And by it is subjected to the law in nature, to the forces of demand and supply, and that is the market movement. So the market volatility will determine what price, and that will be the price accorded to anybody who is doing a trading business. So there is loss, so there is profit, and that is again against the ribawi contract, where in a riba contract, the lending party will always obtain a capital appreciation by way of the agreement, by way of the loan contract that specify specific interest rate over the amount of the loan that must be that must be paid in full at maturity. Okay. Number 2, contract of Albay must be valid. So when we enter into the contract of murabaha, a contract of jara, contract of mudarabah, the contract must be valid. So meaning that we have to look at number 3 here, meaning that to ensure that the contract of Albay is valid, then the pillar of the contract must be examined in detail. So the pillar of the contract consists of the buyer and selling party. So both party must be rational, akil balik, because they are entering into a sale and trading transaction. So the documentation of buying and selling, the agreement, all that require thinking and reasoning. So the buyer and the seller must be people of reason, akil balik, right? And number 2, price must be mentioned on the spot. The subject matter must exist, and the subject matter must be halal, and there must be proper ijab kabul, offer and acceptance, right? And of course, we can see that apart from the understanding what are the pillars of contract, the other issue here would be to make sure that this contract, these pillars of contract, buyer and seller, pricing, subject matter, offer and acceptance, they must be free from the element of riba, the element of gharar or ambiguities, the element of gambling, which is maisir, and the element of haram commodity like pork and alcohol and narcotics. So this prohibitive element must not be present in the contract. So if this contract have evidence the existence of riba, gharar, maisir, and haram commodity. So the contract will become invalid, right? The contract will become invalid, and therefore it cannot be utilized in the transaction. And if it is utilized, any disagreement or any conflict arising from the trading would not be protected by the law, because this contract that is not valid will not be enforceable in the court of law. So we must make sure that all contract must be valid, in the sense that it must be free from riba, gharar, maisir, and the haram commodity. So Albay is not only sale, it is beyond sale. So it is in the Islamic tradition, it's a rich tradition where, in the early period we can see that the Islamic empire has basically, expand, from the Hejaz to Spain and to China, and all this expansion of the Islamic empire, provides a very good degree of, idea how diverse, is the trading and business enterprise over those period in early Islam. So we will see that, the Albay, which is mentioned as a sale, when we look at it from the perspective of a bigger economy, enterprising expansion of business over borders, then we can see that our Islamic tradition of Albay is indeed very, very expensive and fulfilling, and we must not be ignorant enough to just look at Albay as a simple sale. But the idea is that it is a sale whereby the principle of risk-taking is the main ingredient that pushes the Albay into the domain of international trade. Yes. Okay, so I think we will stop here, and then we will continue on another topic, which is the principle of al-mal, kasab, and daman in determining the lawful profit in Islam. See you again. Assalamualaikum warahmatullahi.